Hello and welcome to another update video. I'd like to cover a Trust Wallet token. TWT had a few requests. Also, it has performed quite nicely over the course of the last few weeks and months. And I guess certainly the issue around FTX and the, the lack of trust in exchanges certainly has given Trust Wallet token a little bit of upside. Want to take a look at it from an Elliott Wave point of view, and I can tell you straight away, it is not a very reliable chart. So it is something, of course, that can be traded, but it is not a great chart long term. What makes it more difficult is that there isn't really a super long chart history. Yeah, it's all right. I mean, it started sort of February 21, but the whole chart looks like a diagonal pattern, which is not great. Because these patterns are generally rather unreliable. But we can give it a go. From an Elliott Wave point of view, my view would be, and that is the bullish interpretation of this, that we moved up in a wave 1, we moved down in a wave 2, this was sort of in July 21. We're now in the wave 3, there will be a wave 4 and a 5. The wave 3 itself, and as all waves here, the wave 3 is a 3-wave structure. So all of these subwaves can be considered ABC waves. So you have it here, ABC, ABC. Sorry, I just didn't catch them correctly. You've got here an ABC as well. And then here, the wave A is a 5-wave move in itself. So we've got ABC in 1, we've got ABC in 2, we've got ABC in 3, and there should be an ABC in 4 and an ABC in 5. So yeah, that should break it down. We can see generally that these kind of diagonal patterns, they are not very reliable because it is not a proper impulsive wave structure which is developing here. Yeah, a diagonal pattern can be a beginning of an uptrend. Yeah, so what you need to think about, this would be part of a larger, ideally, yeah, it would be part of a larger 5-wave structure. So wave 1, 2, 3, 4, 5, and so on. Let's just change the wave degree here just to give you an idea. And what is important is that this first wave, if it is really a leading diagonal, because it could very well just be a corrective wave, which would result in an impulse down, which I don't hope, because it would probably lead to the death of the Trust Wallet token. But if it is a leading diagonal, then to get more confidence into this overall wave count, we need to see all 5 waves as complete. Now, to get an understanding that really we are in this higher degree pattern, we need to see that. Because again, that's the problem with diagonal patterns. Yeah, the problem with diagonal patterns is you have too many overlaps. It looks very corrective. And that could very well just be a corrective move to the upside, which would result in an impulse down. That is why they are not very reliable. I always only tend to believe these wave counts with diagonals if we really get all 5 waves as complete. So what is missing is the completion of the C wave in 3, a wave 4 decline, and a wave 5 to the upside. That is what I want to see. And if we get these 5 waves, the next high probability entry point would then be the wave 2, ABC down. So you get your wave 1 complete with this 5-wave structure. And then the next correction in ABC, that would be a fairly high probability entry point. But until we see the ABC as complete, we don't really know, is this the correct wave count? Yeah, I mean, this could very well just be a corrective pattern, as I said, to the upside, which would result in a lower low afterwards, which we don't hope, because if that happens, Trust Wallet token is probably not going to make it, let's be honest. So that's why I've sketched out the bullish count here anyway. But generally those counts with diagonal patterns, they are not highly reliable. We've got the other problem here on this chart, that the chart moves in a so-called ascending wedge. An ascending wedge is generally considered a bearish wave pattern. And at the moment, the price is still constrained in this ascending wedge. It is a pattern which, of course, can break out to the upside, but probabilities generally show that these patterns break out to the downside. it could be the case that we've already now completed wave C, or maybe get a little bit more upside in C of 3, and then we come down. Wave 4 could hit channel support, and then wave 5 could hit channel resistance. Only when we see those 5 waves as complete, we can say with greater certainty that this wave 1 was done and we're waiting for a wave 2 retracement. And that is the moment when this pattern could break out to the downside. Yeah, that's why I consider it generally a bearish pattern, especially if you see it on a higher level time frame like this. It's never something that I'm a great fan of. Yeah, and I mean, this was the log chart. We can also look at it on the linear chart, and it gives you a similar view. Not quite that nice, but here on this chart, it's not an ascending wedge. It would be considered an ascending broadening wedge, which is a very rare pattern, but also not a pattern that looks really good. Yeah, it's a slightly ugly pattern, but it doesn't change the wave count at all. Okay, so we can go back to the log chart. It just looks a bit better and seems to be a little bit clearer here on this time frame. But also bear in mind that in diagonal patterns, Fibonacci levels are not that relevant. What is relevant are the constraints of these channels. So as you can see here, if we have now a chance to reverse from here. Yeah, at the moment we haven't broken this resistance level at 270. I think a 270 break could take us higher, but then we take it into all-time high territory. Yeah, so it's a bit uncertain where that might take us, but it's a really good time to turn around here as well for a wave 4 retracement, because in this wave C, yeah, we've got enough waves to consider it as complete. So here again, a wave 1 leading diagonal, here a wave 2, then we've got here possibly another 1, 2, 3, 4, 5. Yeah, maybe one more leg up would be possible, but it's pretty much getting exhausted in this wave 3, I would say. And then we should see that wave 4. That would be confirmed by looking at the RSI, the relative strength index. You can see that we have here, yeah, not quite yet, but if we push a little bit higher, you'll get your bearish divergence. You can see that spike here on the RSI, which took it to 88 here on the 15th of November. We're now basically at the same price level, but the RSI is much lower, which indicates we are losing momentum here. Yeah, and that is always a warning that things could turn around. In addition to that, on the daily chart, we're basically close to we are at the overbought range now at the 70 level. That is also an indication that things will possibly get exhausted here at some point, because you know, just look at this entire chart. Oops. Just look at this chart, and you can see that throughout here, no, where are we? So we are pushing higher, yeah, but the RSI is constantly losing here out. Yeah, the RSI is going lower, the spikes are going a bit lower. We had this one exception here, but it indicates that, and that's exactly the point of such an ascending wedge, that at some point you're going to lose momentum here. Yeah, and the breakout to the downside, so the breakdown is going to happen. On the 4-hour chart, we are also pretty much overbought. So it is certainly something to consider that we're at the make or break point here. Double top, possible double top here. Yeah, and if we cannot make it above that channel resistance, so basically above, I would say 270, 275, then this is an ideal double top. We're overbought, we've got bearish divergences, and we could break down from here. If we break higher, if we go higher, indeed, yeah, well, then, and that's where the problem comes in, because in if we look at diagonal patterns, the Fibonacci extensions are not that reliable, but we can make it, we can you know, give it a go, and we could take here the Fibonacci extension, we take the length of the A wave, we go to the low of the B wave, and well, okay, as you can see, we've actually already reached the 1.618 extension, which is for a C wave ideal. So actually we don't need it to push any higher. It has done what it needs to do. So there are certain warnings now that this could get exhausted very quickly. Okay, we're at channel resistance. We've reached the 1.618 extension. We've got bearish divergences. Going long here would be for me too risky. Yeah, we're far away from support. We're just below resistance. And I would personally wait for that wave 4 retracement. Personally, yeah, to even consider going long here. But as I said, it's a not a very reliable chart because we've got this ascending wedge and it's a diagonal pattern, and these are just due to the very nature of what they are not very reliable. Okay, and that's my update about Trezor token. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.